So first of all, because it is difficult to generate and it has always been difficult to generate, that's why those who generate it overcome those difficulties, find ways to generate it, whether through the information edge, analytical edge, behavioral edge, whether by exploiting the time arbitrage, thinking long term, or the research arbitrage, which is like doing a much broader and deeper research to identify the right stocks or taking the sector bet or the market timing, whatever they do to generate alpha. That's why the people who generate alpha, they are the ones who charge fee for that, and it has never been very easy. It will never be very easy, but of course through a process, through a machine that you put in place to generate the alpha, one can do it. I strongly believe that in Indian markets, which is kind of a stock picker's paradise, given the number of stocks, liquid stocks, which an institutional investors can participate in, and given the fact that a very small percentage of that market is with with the active institutional investors like mutual funds who have the resources at their end to ensure that alpha is generated over a period of time. I think we have a long history of alpha generation over the last 20-25 years. Several of our funds have a great track record of generating alpha. If you look at last 1 year, a year back, people were saying that alpha generation is behind us. In last 1 year, huge amount of alpha has got generated, and I feel positive about the long-term potential of alpha generation by fund houses who put the right resources, right people, right philosophy in place. So first of all, we should never have a debate of active versus passive in India. In a country where there are just little over 3 crore unique investors in the mutual fund industry, we have a long way to go. There is growth potential for both active as well as passive. There are active funds which have generated alpha for investors that make sense. For a lot of investors who want to just get the index return through a cost efficient way, they can look at the passive funds, and fund houses are coming with more and more products, and it's up to the advisors and the distributors to advise the right choice to the investor. And investors who are investing in both the categories, they need to look at their overall asset allocation and the right way to get that asset allocation through the right fund selection. I think anything that makes sense for your clients will make sense for you commercially also. There cannot be a trade off between a distributor or advisor's economic interest versus the client's interest. And the same thing is for manufacturers as well. Anything that makes sense for all in the ecosystem, anything which is a win-win situation is the one which will have a more lasting success. So in a client's portfolio, if there is a certain passive strategy that makes sense for a portion of the portfolio, I think a passive strategy should be suggested. As I mentioned, in India, we have a great track record of alpha generation for a very long period of time, and I feel pretty positive about alpha generation capability. Having said that, if certain part of the portfolio, whether it's a strategic allocation or a tactical allocation, given the time horizon, liquidity needs, and the other considerations that an investor has, accordingly, one should suggest the right kind of products or the right kind of overall solution to the investor without looking at where the commercials are different. I think the passive has been a more recent phenomena. I mean, even if you look at the developed market in US, after several decades, passive took off. Now passive is a large part of the market. In India, as I mentioned earlier, even at the cost of repeating, I'm saying that active management has a very good track record. So obviously, a larger market is there, but now you are seeing a lot of innovation, the ease of transaction, the ease of buying or selling ETFs or investing into index fund houses are doing a lot, and of course the entire ecosystem is getting developed. I'm sure there would be interest in passive also, and for the advisors, relatively, I would say, relative to what it was few years back, would be easier to offer both the products, active as well as passive, in all asset classes, whether it's equity, fixed income, and then the gold, of course, has always been in the passive category.